right. Hello, Mish. We are back, and the markets are doing the same thing that they did last Monday. I'm showing the SPYs uh, gap down below last Monday's low because of the tariff
DeepSeek.
announcement. What do
Oh,
you
last,
think?
well, I was going to say last week was DeepSeek. This week it was tariffs. What do I think? Well, I think as a trader, this is fantastic. I mean, you can't hope for better opportunity to trade in a volatile environment on these gaps, especially if you kind of know the MO of our current administration, which is very headline oriented, extremely hyperbolic in terms of its threats, which is seemingly some kind of very successful at this point negotiating tool. So if you kind of have that in your mind, you could actually sort of think about buying the dip. And yet, as we're going to talk about with you, is what does that mean? What's good to do? What should you avoid? And what happens if something's a little bit on the fence?
Yeah. So, theme for today is how do we know what's going to survive the chaos and what's going to either crack or just fade away. Well, I don't want to say fade away because I'm going to go straight to Nvidia
Okay.
because um, that certainly still the hot topic, even though it was not today's hot topic. It was the first thing on my mind when I heard the market was down so much was, oh, I wonder if Nvidia made a new low. Um, So I certainly have my thoughts on this, but I'll let you go first.
Well, it's interesting because I was just thinking about something I read on X that the peak that you see there in November was when Jensen Huang signed his name on this woman's breasts.
No, I missed that.
Yeah, no, it's funny because the timing was actually kind of perfect. That was the high of the market. So I'm just cracking up thinking about that to myself. But clearly we've had other issues since then. And of course, the biggest one is the DeepSeek and then also concerns about tariffs in China, although as we just found out with Canada and Mexico, anything could happen with that. So essentially, this is just a great example of something that could do no wrong for so long. This was a buy the dip scenario for really the last couple of years until we got to 2025. And so it follows all the classic things you and I have been talking about, Jeff. It never cleared the 6-month calendar range high. Then it had a huge gap under the 6-month calendar range low, retested it, but could not necessarily get through it. Of course, broke down under the 50, which now has a negative slope. Even before that, the 10 crossed below the 50. That was really happening more in like early December, which was telling you that the momentum was weakening. Looking at the momentum, we talked about that last week. The momentum definitely has been weakening. And now here we are with another gap under the 200-day moving average. So you could say we're getting oversold. We don't know. However, we don't have any evidence of that yet. And unless you love to go short, this was certainly not the place to be on buying the dip.
Right. Gap down below the low. It's like stepping down. And as a result, SMH um, looks very similar.
Yeah, and on the economic modern family front, SMH, and I wrote a whole weekend daily. Of course, the biggest part of my daily was about 1965 versus 2025, and I hope you guys read it because I really think it brings up some interesting points. But I also did the second part on the modern family, and the only one that looked like it was at threat to break the 50-week was the semiconductors. And even today with the gap lower, it didn't get back over that 50-week. So here you go again. Just everybody loving Sister Semiconductors has been the Wonder Woman of our life. Not so much this year. And we can see that it's set up using those calendar ranges to be a
Yeah.
dud unless at some point we get this massive reversal.
Right. So that's what it looks like when something's not really working. We talked about this last week, I believe, XLV. This thing has just been, I mean, I'm not in it, but it's just been amazing how nicely this thing has worked with respect to the calendar ranges. And I say that because um, it was just getting hammered going into the new year, and then as soon as 2025 shows up, it starts making its way higher. Here's your calendar range high in there, and now we're sitting on the 200. Like it's like the opposite of Nvidia.
Yeah, and by the way, IBB looks kind of similar too, since we're, talking Modern Family. That's in the Modern Family, my
Yeah.
big biotech. But here again is a classic example of headline, because that massive move lower was after Trump won and RFK Jr. was going to take over the helm for the FDA and things like that. The whole idea of his being anti this, anti that. And of course, the market realized that that was certainly an overreaction. And the truth of the matter is, we've got lots of reasons to like the healthcare space and the whole biotech space. There's still a lot of viruses around. The bird flu is certainly something that's been affecting egg prices and chicken prices and even live cattle prices. People are, taking better care of themselves in terms of healthcare, more in my vanity trade. So all these things, this is one of the things you and I talked about before we started the video, was it's good to have a theme and then look for the opportunity in the theme. And so far we've talked about two themes, right? One was avoid the semiconductor space. It's done for now. And two is, well, yeah, it was pretty obvious to me that immunology was going to come back this year. Viruses are still going to be a thing. We have had some kind of I won't call it a pandemic, but we certainly have had flu and so many other different things going around. COVID's still a thing. So I was thinking, this is an area that we should look at. And here you go. So you're looking at IBB, doesn't look as pretty as XLV, but nonetheless, let's dissect it. What happened today, right? This is perfect, because this is one of our examples that we were talking about before. It cleared the 6-month calendar range. It also cleared the 50. But it couldn't clear that 200-day moving average, that big spike on Friday. It looked like the thing was just going to take off.
Right.
It didn't. And then today it had this massive gap lower. Look where it opened up, right on the 50-day moving average, went right back through the 6-month calendar range. I haven't seen a 30-minute chart, but I'm going to guess that the 30-minute chart corresponds with that area of the 6-month calendar range. Now you had like an absolute perfect risk underneath the low of the open, and you wound up having a nice move today. Is this a 30-minute you're looking?
Yeah, so this is the 30-minute chart. So that means this is the 30-minute opening range, right over 137 there.
Right.
So yeah, once it broke out over the 30-minute opening range, it held it.
Yeah, and look at that. I mean, this doesn't show the 50-day moving average like the daily does, but pretty much under the low of the day, which was 136.49. You could have had a risk right there. So you basically could have risked $1. And I thought it closed a little bit higher than this. Can we go back to the daily?
Yeah. Yeah, there's a wick.
That's a wick. Okay, so it didn't close quite as strong as we would have liked. So that doesn't mean you've missed the boat. You can still do everything we just talked about. It's back over the 6-month. It's holding the 50. But like we mentioned to you before, it has to now clear over that 200-day moving average to really look interesting.
Yeah, and while we're on the topic, the same thing with XLV. Whoops. So XLV is sitting on the 200, but it's really got its own consolidation. So if I were looking at IBB, I'd be looking at these two together. If they both break out of this multi-day consolidation together, that would be a nice, intermarket confirmation.
And by the way, something you taught me, and I know you teach it to people who come to your classes, is that sometimes it's good to look at the 6-month calendar range that was before. It's interesting how they can sometimes turn out to be support and resistance. And look at
Yeah.
how the 6-month calendar range from July is exactly where this is
Yeah,
consolidating.
this one's actually, this is last January. Oh no, I'm sorry. It's July. You're right. Red and green is July in this chart. Yeah, July.
And that, so look at that. So you have almost like a triple reason to look at this chart once it clears, let's say 148 and holds it, and you have a really, really tight risk. I wouldn't risk all the way down to the calendar range low. I would probably risk to under the day where it cleared that 200.
Yeah, you've got that. That's a great risk.
Yeah,
Consolidation over the 200, and if you're in there, then 150 is really the big number.
through
Um,
that. Yeah,
so yeah. Well, speaking of health related, AbbVie.
Avi. Yeah, so this is such a, I mean, first of all, those of you who have read my outlook for 2025 know that this is in my top 10. Those of you who might have looked at the Money Show email that Jeff sent out, I was asked as one of many, many people to have two picks. Avi was one of them. And then last week it had the surprise. I went on BNN Bloomberg. I had given them my note for Abby before I came on the show. And then I was like, damn, I actually think I laughed saying, I wish it hadn't gapped up like that, but it reported earnings with great guidance going forward. So there you go. So I was like, I'm not chasing this thing. Let's see what happens today. And here's a great example. Like it came right, it opened lower on a little bit of a gap and immediately turned around. So, and took out the previous day low from Friday. So this gave you all kinds of opportunities to get in today, whether you wanted to do it on the 5-minute opening range breakout after a gap lower, whether you wanted to do it on 30-minute opening range breakout. But it's definitely one of the reasons why Abby did so well. And that's why the biotech is such an interesting space, and healthcare. This is all about immunology and Botox, but that's the secondary revenue for this. It was really basically the immunology that brought their earnings to be so strong.
Yeah. So here's your 5-minute opening range.
It was
And
beautiful.
here's that gap, slight gap lower, right? This is what we talked about last week. The market gaps down pretty big. Look for the stuff that hasn't gapped down. Last week it was Apple actually gapped higher. Um, this gaps down modestly. Doesn't even count. In the first 5 minutes, you're already up on the day. What you can't see on this chart, but if you follow what we do on intraday charts, your floor trader pivot was right around here, 186 and change. So you're coming through the 5-minute opening range breakout. You're going through the last hour of the prior day and your floor trader pivot, all with a stop below the low of the day on a day when the market had completely gapped down, and this is showing great strength. That's what you want to look for if you're a quick trader on a gap down. I call it opportunistic trader on a gap down day like this.
Yeah, and it was a mish pick. So, there you go.
And it's a mish pick. And what does it care about tariffs?
It doesn't care about tariff.
Yeah.
Right.
Um, so, all right. So let's go to um, gold.
Another
Speaking,
mish pick for like the last 3 years.
yeah.
Right.
Speaking of stuff that has just continued to just kind of grind higher.
Yeah. And by the way, I every day I read people saying gold is done. This is it. This it's the top. Blah blah blah. And you'll probably hear it again because look at that hammer candle that it has. Oh yeah, that's it. But that's GLD. You got to watch the futures. You know that. And I know we're over 2,800 now, which is a breakout. That's a breakout. But anyway, nonetheless, this was another classic example that the market opened up lower with a big gap, but gold held. So I haven't looked at a 5 minute or a 30 minute chart. It doesn't look like though it had a breakout today. It looks like, did it make its range all within the first 30 minutes?
I don't know. Well, here, let's just go to the 30-minute. Yeah, the
Yeah.
whole day was within the first 30
So
minutes.
there really was no trade here at all. But in terms of a day trade or, in terms,
Right.
but it did have an opening range reversal trade. Let's not necessarily go into that. But if you have a gap up like this and you don't get a 30-minute OR breakout, and instead you get a 30-minute OR breakdown and it comes right back into the range, that's what we call an OR reversal. On a strong stock like this, you didn't have a lot of money in it, but you would have had a little money in it. Gold miners, I think, were probably a little more exciting than this today if you want to look at GDX. Yeah, yeah, there's GDX.
Yeah,
Yeah,
that's on the 30-minute. So
okay.
there's not much of a
Not much there.
there's not a breakout here today, but getting to just the point of where do you want to be spending your time. This again, it's through its calendar range high and working its way higher, and the market opens lower, and this doesn't.
Right.
It just continues to chug higher. So, it may not have been great from a day trading perspective today, but from a swing trading perspective, this is one that um, this is the type of pattern you want to look for an entry.
Right.
Um, okay, TLT.
TLT, but before we do TLT, since I know what, for the last three podcasts you and I have done together, we talked about Stratasys. Can we look at Stratasys?
Oh yeah.
Because this was my money maker today for MGAM and also personally. And I certainly led you all to this thing. It wasn't the easiest setup, I will say that. Is this a daily? Yeah, this is the daily chart right here.
Yeah, yeah.
Okay. So, this was the kind of thing Jeff and I talked about this one a lot. And there was a little bit of frustration because it got through the 6 month calendar range and then it failed it. And then it actually broke down under the 50 and it closed under the 50. But I had gotten in a while ago, so I knew that I was not getting out of this stock until it breaks the 6 month calendar range low. I was giving it room. I mean, really, basically, you're talking about a $2 range, which is a 20% move from 10 to 8, but still, I felt like that's what you had to give this thing. So, today was the payday. So I just feel really good because I think look, it took out all the work going back to what?
Yeah.
Yeah.
This looks great. And the real motion divergence is
That's what, yes, we talked
taking
about.
hold, right?
Right.
So
And again, what does this have to do with tariffs? Nothing. The reason why this is projecting great earnings going forward for 2025 is because they made that deal with NASCAR, exclusive deal to make the 3D parts for the cars in NASCAR, the hottest sport in this country. I think you told me even more so than the NFL. So
well,
nothing.
wait a minute, wait a minute. I'm not saying on video that NASCAR is hotter than the NFL, like the week before the Super Bowl, I think.
Oh, yeah. Oh, speaking of Super Bowl, one
And
thing.
I wouldn't know, but it has bigger it has a bigger stadiums than the NFL.
Well, one thing that's so funny, last week I posted about the avocado index when there was
Right, right.
the avocado index is that the avocados, which already are expensive, have the greatest use on Super Bowl Sunday, guacamole. And if the tariffs had gone through, Mexico also having a drought, you could have been spending a fortune for your guacamole with your chips. So the guacamole index showed us that obviously things weren't going to get that bad, which I'm happy about because we have some people coming over for Super Bowl. But anyway, I just want to mention SSYS because, I feel good about this.
Well, this is how it's supposed to work.
Isn't
You've
that
got the
supposed to work? Right.
divergence
Yeah.
on real motion.
Yeah.
You break the 200, then you wait for the follow through, and this turns out to be outstanding because this is they beat on EPS and they raised. So you got a beat and raise on a breakout of big consolidation on a base this size. You're not done here. Like so, if you're not in this thing, you look for an entry as it consolidates, or when you can have a stop that you can put under a flag or the 10-day moving average. Because let's face it, if it goes up to 15, that's a big move from here.
It's a big move, yeah. Okay, so let's end with TLTs. I'm sorry I interrupted you, but what were you going to say about it?
No, that's it. No, let's go to TLTs.
Right.
I am a big advocate of making sure you know what the TLTs are doing, knowing what your
Me
TLTs are
too.
doing.
Well, our whole Big View program is based on the TLTs versus the SPY, the TLTs versus the junk bonds. And that's why I too watch this very carefully. I've been known to trade it, but let's say the market, even though it came back today and maybe even gaps up again tomorrow because the Canada tariffs have been also postponed for 30 days or what have you. But maybe the market's not really convinced that we're just going up to new highs. This is where I love to watch the TLTs. I like to watch it in its relationship to the SPY in particular. But even in of its own, we had the Fed meeting, they paused, but they did say that they, being Powell, said that he's going to be very keen, not so much on inflation, interestingly, but on the jobs data, which comes out Friday. So this is to me great. This has been dancing on the 6-month calendar range. It's under the 50-day moving average. You get 2 moves over the 50-day moving average. I would imagine the momentum will do the same thing, clear its 50-day moving average. So not only could you potentially have a trade and you can just risk underneath, let's say, the low of Friday or something like that under the 10-day, because it looks like it's going to start to converge with the 6-month calendar range high. And you have a trade, but on top of that, at least till it gets to the 200. But on top of that, you have to ask yourself, what is the implication for the market? And that I wrote a whole piece on that last week. So if you go on our website and look in the archives from last week, you will see my article on TLTs. But essentially, yields start to fall. Sometimes it's good news, and sometimes it's not such good news. So this is something to keep an eye on too. But from a technical standpoint, this also on a gap down, did not gap down. It actually
Yeah,
up right on the 6-month calendar range high, made that initial move up. And then when the Mexico announcement came that we're waiting 30 more days, it sold off a little bit, but it still looks primed and ready. So this is going to be your best indicator. What I'm really trying to say is not only did it work as one of the things that are on the fence, but it could be a great indicator on A, where inflation's going, B, what the Fed is planning to do, and C, how robust this market rally is really going to be, because low interest rates may not necessarily be the best thing for the confidence in the stock market.
yeah. And yeah, this is definitely where everybody's eyes are going to be on Friday.
Yes.
And I would argue, don't overthink it. It's if it's higher than the line we're drawing right here, it'll be over the 50, and that's your 200. And if it's under this line here, you're back in trouble.
Absolutely. So
Keep it simple.
keep it simple.
All right. Well, I don't know. I don't know if we're going to do 3 Mondays in a row of big gap downs, but I think anybody who's watched the last 2 videos, you should be ready for the next one, with one exception, which is, second time is a charm, but the third time, I'd be a little nervous if we get another gap down.
Well, yeah, me too. And especially, but now they know if you get a gap down and you don't take out that 30-minute opening range and you break down under the 30-minute opening range low, don't start trading with hope. Just get out.
Yeah, yeah. Oh, for
And
sure.
that's it. And look again and save your equity. This is a stock picker's market. And we just showed you why, how, and when that works. And of course, you want to keep away from things that could be really in the crosshairs of headlines and the chaos. And so, those are the best tips I'm giving. Stock picking this year takes on a new meaning because it's not Mag 7 anymore.
Yeah, and knowing how to play the gaps on news that is specific to segments of the markets. It's a little bit of work, right? Because you have to run out and find the stuff that hasn't gapped down and make sure that it makes sense that it hasn't gapped down. But as we can see in the last couple weeks, it really can be great entries. And it's simple. It's
Yeah.
simple in terms of the tactics. So,
Listen, IBM was another one we talked about last week. I mean, IBM
and that's held up.
up, and today it came off a little bit, but then it immediately turned around and went right back up. So,
Right.
yeah, so, there's stuff out there, and happily, I've been really finding it and transmitting it to you all. So you do the work, but you also know that, I'm doing the work too. And so is Jeff with his outlook. So,
All right. Thanks, Mish.
all right, great.
We'll be back next week.
See you next week.